welcome again to my show, Searching for Integrity. My name really is John Smith, and I'm searching for people with integrity. Why? Because our country suffers from IDD, Integrity Deficit Disorder. Today, you have yours truly, me, bringing me with a bucket full of articles about things in the markets and economics. And you might think it's going to be some information you'll find out, and it'll be worthwhile. I think so. If I was one of you, I'd be would. Okay, I'm going to begin with the big move in the Nasdaq, the unprecedented and unfathomable stock in NVIDIA makes jaws drop on Wall Street as stock explodes higher. Now, this is all happening in the Nasdaq. This is not all happening on other exchanges. For instance, the Dow Jones Industrials, they started out the day minus 120, something like that. And then over a period of about 3 or 4 hours, 5, that type of thing, you could see that they're coming down, but they're only down 15 points, whereas the Nasdaq's sitting over there with, that's crazy, 200 and something points. And they're usually not doing that. Analysts are awestruck in describing NVIDIA's latest outlook, with one musing that it could have marked the greatest beat of all time. Unprecedented, cosmological, unfathomable, all those adjectives apply. These are just some of the ways that awestruck analysts described NVIDIA's latest bout of quarterly guidance. The chip maker said it expects $11 billion in revenue for the current quarter, an outlook that far surpasses the prior 7.2 billion consequences view that would blow out of the water NVIDIA's previous quarterly revenue record of 8.3 billion. NVIDIA stock soars toward all-time high as a record revenue forecast backed by killer app of AI, artificial intelligence. That sure has taken up a lot of the news, the AI. In the 15 years we've been doing this job, we've never seen a guide like the one NVDA just put up with a FQ2 outlook that was, by all accounts, cosmological and which annihilated expectations. Did you get that last part? Annihilated the expectations. All those smart guys. Bernstein analysts wrote in a note to clients following Wednesday's report a couple days ago. Nope, just yesterday. NVIDIA shares have enjoyed a massive recent run, rising 109% over the course of 2023 as of Wednesday's close, on the heels of optimism about the company's ability to capitalize on the artificial intelligence boom. NVIDIA's management showed it expects the AI hype to translate to serious revenue and quickly. Tactically, the only question that really matters is whether the new data center trajectory represents a new normal run rate or a surge on the back of generative AI hype. Rascon continued. However, at least in the near to medium, it does appear to be sustaining, at least through the year, and we would note that 1 year cycle around a new architecture would actually be an anomaly. NVIDIA stock is ahead another 25% in Thursday's morning trading, putting a 1 trillion valuation in sight. The stock is not the best performer in the S&P. However, according to George Dow Jones market data, but also index biggest gainer so far this week, this month, this quarter, since this time last year. Don't miss after NVIDIA's blowout guidance. Here is the percent of revenue other companies will probably get their AI this year. Interesting, very interesting. Something that has brought everybody's their hair and standing straight up. How can that happen? And we don't know yet. We're going to keep a view of it and listening, continuing, and see if it happens. Second item I wanted to look at is there is no other China. There is only one China. NVIDIA CEO warns of enormous damage if China chip war escalates. So there you go. If that happens, then all that was gained today is probably going to go directly towards the bottom. Jensen Huang of NVIDIA says the U.S. doesn't have a contingency if it loses the China market for chips. We're deprived of the Chinese market. We don't have a contingency for that. There is no other China. There is only one China. That's NVIDIA. Chief Executive Jensen Huang, who said he sees the potential for enormous damage to U.S. companies if the chip war with China escalates. He made the comments in a recent interview with the Financial Times, cautioning lawmakers to think about the implications of further Chinese trade restrictions. We are deprived of the Chinese market. We don't have a contingency for that. There is no other China. There is only one China. Do you get it yet? Only one China. In Huang's view, the U.S. would be swimming in fabs, F-A-B-S, the plants where chips are made. If the company loses the Chinese market, which would cause its capacity needs to fall by a third. If they're not thoughtful on regulations, they will hurt the tech industry, he said of U.S. policymakers. See, that's the kind of surprise that's going to be in reverse about what's happening today. Picking up again, there's the threat that China will move to build more chips itself if it can't buy from U.S. companies. Companies in China are already starting to make chips that challenge NVIDIA's, according to the report. The interview occurred just before Chinese regulators announced the results of cybersecurity review in Micron Technology. Sunday, Micron failed the review, and China ordered critical information infrastructure operators in the country to stop using company's products. That's Micron, a U.S. company. So it's already turning around, it looks like. Micron stock falls after China ban. Here's why gauging the impact isn't so simple. NVIDIA itself has been impacted by chip war fallout, disclosing in August that the U.S. government imposed a new license requirement for future exports to China and Hong Kong that would affect the company's A100 and H100 integrated circuits. The move effectively restricted NVIDIA's data center business in China. Wang could share more about China chip wars after the close of trading Wednesday, as NVIDIA is due report its fiscal first quarter results. Investors will be keenly focused on the opportunities ahead. NVIDIA in artificial intelligence shares of this chip maker have surged 110% so far in 2023. Amazing. With the rally fueled in part by optimism about AI. Remember, artificial intelligence and NVIDIA's role in helping companies train AI applications. NVIDIA stock has more than doubled this year. Can earnings justify the AI hype? Probably not. Makes all the other stock brokers and so forth got to have a piece of this upward movement. And then that's probably then going to get them in the wacky, because the U.S. is working hard by doing nothing, Biden and the Democrats, and those are going to be problems with the debt ceiling. The debt ceiling deal will spark a new worry. Who will buy the deluge of Treasury bills? It's an unintended consequence of a debt ceiling deal getting done, said George at DSW Group. When Congress finally agrees to a deal on the U.S. government's debt ceiling, the Treasury Department will need to flood the market with Treasury bills to refill its coffers. How about that? When the U.S. debt ceiling fight finally is resolved, Treasury is expected to unleash a flood of bill insurance to help refill its coffers run low by the protracted standoff in Washington, D.C. over the government's borrowing limit. The question is, who will buy them and at what price? Treasury bills are debt issued by the U.S. government that mature in 4 to 52 weeks. New bill insurance could reach about 1.4 trillion through the end of 2023, with roughly 1 trillion flooding the market before the end of August, according to an estimate from B of A, Bank of America, global strategists. They expect the deluge through August to be about 5 times the supply of the average 3-month stretch in years before the pandemic. The good news is that we have a high degree of confidence around who is going to buy it, said Mark Cabana, Dates strategist at B of A Global, in a phone interview with Market Watch. That bad news is what it's going to be at current levels. Those have to cheapen. Things have to cheapen. Sees a key buyer of bill supply unleashed by debt ceiling deal in money market funds, which have climbed to nearly 5.4 trillion in assets managed since the regional banking crisis erupted in March. So people who yanked billions of dollars in deposits from banks after the collapse of Silicon Valley Bank in March and parked them in money market funds, could we end up playing an encore performance in this year's debt ceiling drama? Very well could. Very much so. Very much so. The money market funds swell since March, topping 5 trillion in assets. Related money market funds swell to record 5.4 trillion as savers pull money from bank deposits. 2 trillion at Fed repo facility. A repo, it's It's a way to maneuver money and cash and so forth. Money market funds have been the main reason why at least 2 trillion consistently sits overnight at the Federal Reserve's reverse repo facility. There you go. Reverse repo. I'd explain it to you, but I've had to 10 times to explain that, and still I don't get it. And a level Cabana said new Treasury bills might need to exceed by about 10 to 20 basis points. It is an intended consequence of debt ceiling deal getting done. Head of Fixed Income Americans. About market expectations for heavy short-term Treasury bill issuance, but he also expects money market funds, foreign buyers, and other institutions auctions to continue as buyers in the market. There's always buyers. It's a question of price. President Biden and House Speaker McCarthy met Monday to talk about potential ways to raise the $31.4 trillion borrowing limit and to avoid a doomsday scenario in financial markets. If the U.S. defaults as talks resumed Wednesday, McCarthy said, I think we can make progress today. Otherwise, Congress has struck deals each time the U.S. public debt has exceeded its debt ceiling in the past, including by suspending it 8 times since 2016. In the past, when the U.S. debt limit had been violated, Congress extended or suspended it. That doesn't mean financial markets have been hitting it by idly. The 1-month Treasury yield is a 5.6%, 3-month yield 5.3%, according to FactSet. Bill maturing around the X date, which could come as soon as June 1st. That's next week. Have even higher yields. Debt ceiling angst sends Treasury bill yields toward 6%. Those are obviously pretty heady yields, but it also exemplifies the market having to price in potential market disruptions in the month of June, even though this team, like many in financial markets, could expect that eventually cooler heads will prevail in Washington as the debt ceiling standoff heads down to the wire. Boy, oh boy, oh boy. Sound like the Kentucky Derby going down to the wire. Let's see here. In the Treasury, January hit its borrowing limit and began operating under extraordinary measures to avoid a default. Cash balances at the Treasury Department have since dwindled to less than $100 billion, according to economists. Barclays strategists estimate its cash balance may fall below $50 billion between June 5 to 15. Ooh. Basically, we're just draining our cash account to fund operations while we wait to figure out the debt ceiling. Amazing. But when the battle of the debt limit ends in a resolution, expectations longer dated Treasury yields to increase as haven, buying on fears of potentially a full U.S. government default and a credit rating downgrade will have been taken off the table. The Armageddon, whatever small probability people were pricing in on catastrophe, remove that. And that means the worst economic outcome has been removed. That's also a reason why people have been avoiding ultra short treasuries in the eye of the debt ceiling fight in favor of 2, 3, and 4-year bonds, offering some of the highest yields in years. We've been afforded good deal, good spread, couple of years out to the curve, he said. Play that game. Interesting. How the Fed will react to the debt ceiling breach, we don't know yet. We won't know that until it actually figures it out. Here's another. Debt ceiling angst drives Treasury bill yields above 7%. Wow. That's like the moon. T-bills maturing in the early part of June are seen as the risk for delayed payments. This is amazing. Absolutely amazing. Well, let's not bury anybody or scare anybody. Here's another article, a light article. We thought it was going to be. Bud Light has had their controversy spreads to Target, sending the stock lower. Bud Light's had some troubles, and they've passed it on to Target. Target has for years sold products for Pride Month. Target stock was falling Wednesday after the retailer said it was removing certain products and making other changes in its LGBTQ merchandise and facing pushback from customers. Since introducing this year's collection, we've experienced threats impacting our team members' sense of safety and will be while at the work. I didn't know that they had such a clout. Interesting. Earlier this month, the retailer delivered on earnings beat for its first quarter, but warned of a sales slowdown ahead, which actually happened. AB and Bev stock falls. Target has sold products to Pride Month, which takes places in June. These years, however, reactions seem heightened as other companies, Anheuser-Busch, InBev, Bud, BUD, being the most prominent struggler in similar backlash. I don't think they've had any expectations about that happening. I don't think it was going to happen. I don't think I'll get another dollar problem, expectations, that type of thing. Here's something from Bill Gates. Lays AI tombstone on Amazon and Google. Okay, now let me back it up. Bill Gates lays AI, artificial intelligence, tombstone on Amazon and Google. You'll never go to a search site again, Gates says. You'll never go to Amazon. Whoa. Wow. He's look at that. Dead on. Microsoft Corp co-founder Bill Gates thinks two pillars of big tech are susceptible to the downside of artificial intelligence, as the potentially millions of workers who could be displaced by the technology. Ooh, who's thought about that? In a chat Monday, an event hosted by Goldman Sachs and SV Angel Gates predicted that the sprint to create a top-level AI agent for search engines and only shopping sites could have Alphabet, Google, and Amazon in the dust. You'll never go to a search site again, they said. You'll never go to Amazon. He added, whoever wins the personal agent, that's a big thing. Of course, who will establish the agent first is anyone's guess, said Gates, who added that it could be a startup and not Microsoft. I'd be disappointed if Microsoft didn't come in there, but I'm impressed with a couple of startups, including. Well, I'm going to end that. Looks like this artificial intelligence is going to be a big problem. Who knows whether it's going to be painted a red color or a pink color? We just don't know. Okay, I have a friend, Jim Ryan. He sent me something. It says something that was quoted by Albert Einstein. In the middle of difficulty lies opportunity. We all have problems from time to time, but remember that old saying, every cloud has a silver lining. Our job is to find that silver lining, that opportunity in the problem. And what is that opportunity in every problem? It's the opportunity to grow in kindness, to grow in forgiveness, to grow in compassion, to grow in understanding, to grow in tolerance. We admire people who exhibit these qualities. Try it to the next time you have a problem. Feel your stress level drop. Feel good. Thanks, Jim. I'm so grateful, listeners, that you tuned in today for this educational element of what we're looking at and what we don't know is going to be the solution and how it's going to end up or not. We just don't have it yet. But I am glad you're here and listening as well and tuning in on searching for integrity. So long and happy trails to all until the end. See you again. Thank you. Goodbye.